Hello friends, in our previous lecture we have completed the second chapter of statistics, and I said that one topic is remaining, that is pie diagram, that when we are meeting in the school we will do that. Okay, so after completing that chapter, as I said, now we will move towards our next subject, that is accountancy, and then we are taking chapter number 2 of accountancy. In chapter number 1 we have studied what is accounting, what are the objectives, what are the characteristics, and also very important thing, that are terminology. There were 46 terminologies to the account. Now friends, all these terminologies are useful in such a way that now in this chapter that words will be used. Now in order that you understand the things what they are meaning to say, you need that terminology. Means if their word is given debtors, so now you should know that what are debtors, what are creditors, what is a transaction, what are events, that you need to know. If you are not knowing that thing, then there will be problem for you to understand these things. So friends, I recommend to each and everyone that if you are still not aware of the terminology, or if you have any of the confusion or anything, then just go through the terminologies, understand the things. You don't need to by heart it, understand the things, and then only we can understand this chapter. Okay, now we are starting with the second chapter. One more time I am going to repeat that friends, for the part 1 of this accountancy you need a book which has 11 chapters. Sometimes you are borrowing the books from your friends, that is not a problem, but in this accountancy we need the book with 11 chapters. If you are not having the book of 11 chapters, please buy it, otherwise there are many changes in the book. Many of you may be still using the old book, but we need a book with 11 chapters. Okay friends, now going for the second chapter. Yes, on page number 24. See, after this chapter, page number also will be different for older version and newer version. So please buy the newer version. I will say the page number according to the newer version of the book. Okay friends? Yes. Now going for the second chapter. The name of second chapter is Dual Effect of Transactions and Types of Accounts. Subject Accountancy. Chapter number 2. Dual effect of transactions and types of accounts. Looking at the name of chapter, Dual effect of transactions. Friends, in chapter 1 itself, in the last topic, we have discussed that in account, minimum a transaction has two effects, that are debit and credit, and debit and credit are always equal. So in this chapter, we are learning that if a transaction occurs, then what dual effect we will have to give to that transaction. So this is again a base for writing any entry or doing anything in the account. If you want to study account very clearly, then chapter 1 and 2 and 3 are such a type of base that you first require. It is like a glossary. Before learning glossary, you cannot learn the question answers. In the same way, before learning these 3 chapters, we cannot do the sums for 4th chapter. Till 3 chapters, you will not have to calculate any type of sum, my friends. You just need to understand the things. So this is the very base part. And as you all know, due to this situation, we are not meeting personally in the school. So I am also 50% unaware about you people, that what you people are understanding my words or not understanding, or getting me or not getting. All these things, please don't worry friends, we will discuss in the school again if you have having any doubt, but this doubt solving session is not possible through virtual. Okay, it is possible through that other Google Meet or not, but I don't believe, because this is such a subject where you need special attention. I will give my 110%. Please don't worry about that thing. But please understand the things also. Take it little bit seriously. Okay, so I was talking about the transaction. When any transaction occurs in the business, it should have dual effect. Means you should know its first effect, you should know its second effect. And also account. What is account? Now accounting I am not telling. What is account? Accounting is summary of transaction. It was a one word in the terminology, 46th word, accounting. Accounting means a summary of transaction. Suppose you are buying things from the shopkeeper. Now that is your regular shopkeeper. You are day to day buying so much things from him, and you are not paying the cash at that time. You are telling that we will pay the cash after 1 month or after some time, after 15 days, that is up to the date. Now what he is telling that daily you are not giving cash, so daily I am writing your transaction, but he will write the transaction in one note itself, not different way. First transaction in the first page, next transaction in the fourth page. So it is not possible that to catch up all the transactions. Instead what he will do, he will keep one page for us, that you have purchased the goods for 10 rupees, 5 rupees, 15 rupees, 100 rupees, 20 rupees. He will record. Also he will record on the other hand what money we are paying. Suppose after completion of 15 days we are telling that take this 400 rupees for what things we have purchased. Sometimes we are receiving from him the balance money, and sometimes he wants to pay the balance money. So we are just paying 400 rupees lump sum, whether our bill is of 300 or 400 or 450. So that is need to be recorded in account, and there are different types of accounts which we are learning in this chapter. Now we are seeing what is given. Okay, meaning of a business transaction. Friends, we already know the meaning of business transaction, exchange of goods and service between persons. Simply we can remember about business transaction, but what they are writing down in this chapter we have to look. The first step for preparation of account is the creation of transaction and its identification. No transaction, no accounts. When the word transaction is used in accounting, now what they are telling, when the word transaction is used in accounting, then what are the things we need to know? It has to be a business transaction. If you are talking about a transaction, that transaction should be related to the business, not other parts. It has to be economic transaction. Now what is this economic transaction? We will learn in this chapter itself. Economic transaction should have monetary value. This is very important. This we have learned in first chapter also. Economic means in terms of money, and they have some monetary value. Suppose if you are appreciating your employee that he is working very good, then that is not a monetary transaction. You cannot measure it in terms of money. Business transaction can be in cash or in credit form. Cash means suddenly you are paying the cash, and credit means you are paying in future. Business transaction can be internal, can be external. Internal means within the business, external means outside the business. This has been learned in chapter number 1, like internal liability, external liability. Okay friends? Now again they are giving the definition that was given in the first chapter itself. Business transaction means exchange of products or services of business only in for cash or in credit between two or more persons. Exchange of product, goods or service in cash or credit form of the business between two or more persons. Now again they are classifying the business transaction. Before that, please underline this definition for business transaction again in this chapter also. And I will tell what to write. Many things are given in the book very clearly, so most of this chapter is not to be written in the book, but what to write I will personally say to everyone. Okay? Yes. Now we are classifying the business transaction. The classification of business transaction explains the types of business transactions and the characteristics. With the help of classification, the difference between business transaction and non-business transactions can be understood. Only business economic transactions are recorded. See, there are business transactions, but there are economic and non-economic. So what is to be recorded in the books? Only such transaction of business which are economic. So they are writing the word only business economic transaction. What word they are writing? Only business and economic transaction are recorded in the books. Non-economic transactions are not recorded in the books. The classification of business transaction can be presented as under. Now, economic transactions is classified, non-economic transactions is also classified, and both together is classified in the next page in the flowchart. Economic transaction. Cash or credit transaction viewpoint. Means it has a subtype cash or credit transaction viewpoint, that is cash transaction, credit transaction, other transaction. What is this other transaction? We will learn here itself. Internal or external viewpoint, internal and external transaction, non-economic business transaction. Okay, following is their presentation very clearly. There is a business transaction, it can be economic, it can be non-economic. Economic transaction has cash or credit transaction and internal and external transaction. See, economic transaction can have cash or credit transaction and can have internal or external transaction. Now in cash or credit transaction, cash transaction, credit transaction, other transaction, internal or external has internal and external transaction. Means non-economic is on this side and it does not have any subtypes. Subtypes only economic transaction. Economic has cash credit and internal external. Here cash credit other, here internal external. And non-economic is going in that way only. Means non-economic we don't have to learn anything for that, no subtype for it. Okay. Now we are going to see what is an economic transaction. Only economic transactions of business are recorded in the books of business. Those business transactions, the value of which can be measured in form of cash and where the exchange of money in cash is to be made immediately or in future is called economic transaction. Please underline this thing, friends. From the second sentence itself, from the second line, those business transactions, the value of which can be measured in term of money or cash, in money form or cash, and where the exchange of money in cash is made immediately or after some time is called a economic transaction. This much you need to understand. The transactions at present keeping the proposed exchange of money in future which create a relation of debtor creditor are included in economic transactions. Means they are telling the money which is not paid now will be paid in future. There exists a debtor creditor relationship. Now friends, first you need to know what are debtors, what are creditors. Debtors are the person through whom we want to receive, creditors are the person to whom we want to pay. So in short, debtors are our receivables, creditors are our payables. Means the relation of debtor creditor occurs through business transaction itself. How? If I am selling the goods of rupees 5,000 to you, then I will become your creditor and you are my debtor. How? I will explain. When I am selling the goods, you are my debtor. Why? Because I will receive the money from you. And also I will become your creditor because you want to pay the money to me in future. So whenever we are selling for us, they are debtors. Whenever we are purchasing for us, they are creditors. This thing is explained in the first chapter itself, and here also the repetition is made. Okay. There are two important aspects of economic transaction. Please tick mark that. There are two important aspects. Tick mark both the points. Exchange of cash for asset, goods or service. Creation of relationship of debtor creditor for assets, goods and services. In the first aspect, they are talking about the cash transactions. That you are not paying the cash in future, you are just paying the cash on the spot. For what? For goods, services or assets. And then in the next type they are talking about the credit transaction. For the first point they are talking about the cash transaction. For the second point they are talking about the credit transaction. And the second point says that whenever we are paying the cash in future, the relation of debtor creditor occurs. Means if I am selling, then the opposite person is my debtor because I will receive from you. And if I am purchasing the goods from other, then the other people are my creditors because I have to pay the money to them in future. That is for asset, goods and service. Out of this condition, if one condition is fulfilled, the transaction can be measured in terms of money and subsequently the transaction becomes economic transaction. So what these aspects are telling, in order to know that the transaction is economic or non-economic, firstly you will check that cash is paid for the transaction, for asset, for goods or for service. Cash is paid or not. If cash is not paid, then the relation of debtor creditor comes through assets, goods or services, if any of the condition is fulfilled, either cash or credit, then that transaction is known as economic transaction. Okay friends, we will understand these things through an examples. Examples are given, but this is a theory part. Don't worry, I am knowing this thing at this stage. If you are in 11th standard now, then it is but natural thing that all these things will be going in air. I know, because this is standard 11, everything is new for you. But I will like to say frankly, please take 10% interest, you will gain everything. I know this is very difficult thing whenever we all are not together, whenever you need to study a new subject. If you were in 12th standard, then it was very easy for me, because you know what is commerce, you know what is account, you know what is statistics, you know what is economics, you know what is OCM. But you are in standard 11th. Subjects are new for you, teachers are new for you, the atmosphere is new for you, the type of teaching is also new for you, for us also. So this is somewhat difficult that what I am speaking will reach to you or not. It is dependent on you people. That if you are just watching me by forwarding my lecture, then that is dependent on you. And then if you are trying to watch me 2 or 3 times very clearly, then you will understand something better. So this is a request to everyone. I know the things are very difficult to teach in such a way, but I request each and everyone, please watch me twice or thrice. If you are still not understanding, we will meet very soon. We are hoping that we will meet very soon, and then we will understand the things. Okay. The core characteristics of an economic transaction is its value in money. Core characteristics, core means main. In this paragraph they are writing core characteristics. Core characteristics means main characteristics, that economic transactions should be measured in terms of money. Economic transaction is recorded in the books. They are giving an example that is not required. That this transaction, okay. These examples I am not taking because examples are there after this topic. First we are learning only theory part. Okay. Now they are telling about the viewpoints of the transaction, that is cash or credit transaction viewpoint. What are the different types, or what are the different viewpoints for learning economic transaction? Firstly they are telling cash transaction. See, firstly they are telling in economic transaction there are cash or credit. In that first they will talk about cash transaction and its types, then credit transaction and its types, then other transaction they will explain. After that they will explain internal and external transaction. You can see also how they are talking. They are talking about a total flow chart. First they have talked about business transaction in this page, that is over. And then they were talking about economic transaction. Now in economic transaction they are talking about cash or credit transaction. In that first one we are learning cash, then we are learning credit, then we are learning other. After that internal or external, in that internal we will learn, external we will learn. After that the last part, that is non-economic. So we are learning in this order. Please be careful. Yes. Now we are learning the first type, that is cash transaction and its different view terms. Cash transaction. In this type of transaction, money is paid or received for the exchange of goods and services. This is very simple to understand. Whenever you are paying the cash immediately, or whenever you are paying the cash for any purpose immediately, that is a cash transaction. Now what are the different views? Number 1, cash transaction for asset. Then number 2 is for goods. Number 3 is for service. They are giving simple examples to see. Now we are seeing the examples here. Cash transaction for asset. Now firstly you need to know what are assets. There are different types of assets. Non-current, current, fictitious. Then in that tangible, intangible, fixed assets, then liquid assets, current assets, all that types of assets are required here. So transaction for asset. In this category, assets is purchased by the payment of money, or money is realized by the sale of asset. Example, furniture worth 10,000 is purchased for business. Cash is paid and asset is purchased. And next, a scooter is sold for 40,000, asset is sold and cash is received. They are talking about cash transaction. In that cash transaction, they are talking about cash transaction for asset. How you will identify this is cash transaction? Simply they are writing furniture of 10,000 is purchased. So what will it mean? This is a cash transaction because furniture of rupees 10,000 is purchased and we have paid money. If we wouldn't have paid money, then name was to be given. Here no name is given. I have said in chapter 1 itself. If you are going to a shop, you are purchasing a thing of rupees 20. And if you are giving 20 rupees at that time, he will not remember your name. But instead, if you are not paying that 20 rupees now, you are requesting him, I will pay after 2 days, then he will write your name. That 20 rupees is credit for him, he will pay after 2 days. So here in this transaction, simply they are writing a furniture of 10,000 is purchased. Now what furniture comes in the business? Furniture is purchased and 10,000 would have been paid. If 10,000 would not paid, then name was to be written. And then a scooter is sold. Again scooter is sold, cash is also received because we are not writing anything. Cash transactions for goods. Goods is purchased in exchange of money or money is realized for the sale of goods. Goods worth rupees 15,000 is purchased in cash. Goods worth 18,000 is sold for cash. See, in some of the sentence, cash word is properly written. But in the previous transaction, cash word was not written. Nothing was written. So it is to be understood that you have purchased for cash. Now here they are clearing paid in cash, received in cash. So it is a cash transaction. Then cash transaction for services. Cash is paid for acquired services or cash is received for provided services. Example, salary of 12,000 paid to employee. Employee gives service. Employee is giving service, you are just paying the cash. Brokerage is received. We are doing somewhat brokerage work and brokerage work is received money. So these were all the cash transactions. Note, page number 26. Here the meaning of service is in business where money is paid or received in exchange of work except physical asset. They are treated as service. Thus here the meaning of service is different. Service means we are not repairing anything. Service means you are working in the business, you are giving salary or you are receiving the salary. Suppose in the business you are working for them. That is a service but not for repairing service. This service is different. Service sector has so much sectors. Teaching field is also service sector. Why? I am teaching and I am getting the money. If you are a doctor, you are consulting the patients, you are getting money. If you are chartered accountant, then you are consulting them, you are giving advices to them. So that is a service. Now transactions for receivables or payables. Again in cash transaction, one more thing is included. Transaction for receivable or payable means debtors or creditors. Any amount which is outstanding to pay for assets, goods or services acquired in the past is known as payables. These are paid in present. Any amount which is outstanding to receive for goods, services provided in the past is called receivable. They are received in present. This is just to know that if in the past we have sold something, then its money is received now, then that is a cash transaction. If we have purchased anything, then we are paying the money now, then that is a cash transaction. Previously it was credit, now it becomes cash transaction. So in the cash transaction, simply they are explaining what is a cash transaction. Simply you understand now, when money is paid or received, it is known as cash transaction. What are the types? Asset transaction, service transaction, goods transaction. Now credit transaction. Okay, one more note is given. Instead of cash transaction, if transactions are made through checks, that is by bank, this is also included in cash transaction. Please underline this note on page number 26. After this fourth point, instead of cash transaction, if transactions are made through checks, that is bank, that is also a cash transaction. What is the reason? If I am teaching and I am getting the salary not through cash, through check, then that is also cash transaction for me and for the school. What is the reason? They are not paying me cash, but they are giving me check. That check I can give to the bank and I can get them. So this is very easy thing. They are believing in cashless economy, that first they will give me the cash, again I will deposit in the bank. Instead what to do? On behalf of me, they will write a check, I will give to the bank and money will be coming in my account. So here cashless economy is there. Means you are not paying the cash, you are just writing the check and money is transferred to that account. Nowadays this is only possible. Online transaction, you are paying through Paytm, you are paying through NEFT, you are paying through your debit card, credit card. All these are these types of money. So all that transactions are also cash transactions. Suppose if we are going to a hotel for our dinner or our lunch, and if we are not paying the cash from our pocket, instead we are giving our debit card that scratch it and deduct from our bank account, that is a cash transaction, because you have paid the money through to them. It is not through cash, but it is through bank directly. Their account will be credited. So this is also a type of cash transaction. Okay friends. Now going for the credit transaction. In this type of transaction, money is not paid immediately for the purchase, sales, for transaction, goods and service. Money for those purchase, sales is to be paid in future. However, exchange of asset, goods and service is made in present. Accounts are settled in future. From this transaction, relation of debtor-creditor comes into existence. In brief, purchase, sales of goods, asset, service are made in present, but their money is paid in future. These transactions are non-credit transactions. Now in this credit transaction, a relation of debtor-creditor comes in existence. I am selling the goods, the person is my debtor. I am purchasing the goods, the person is my creditor. Now see examples are given. Goods worth 4,000 is sold to Kalpana on credit. Name Kalpana is given and goods are also sold on credit, it is clear. But sometimes if in the question on credit word is not given directly, it is selling goods of 4,000 sold to Kalpana. Means it is understood that Kalpana name is written, Kalpana has not paid the cash. Kalpana becomes debtor of the business and business becomes the creditor to Kalpana. Goods worth 6,000 is purchased from Deepika. Deepika becomes creditor and we are becoming debtor for Deepika. And the last type, that is other transaction. The transactions that do not fall in the above mentioned two types are special transaction. Means the transactions which are not cash transaction or not credit transactions are other transactions. These are neither cash or credit transactions. These are special transactions. These transactions are recorded in the books. Example, goods are destroyed in the accident, theft of goods, goods are given for donation, goods given for advertisement, assets turned defective or useless. What this special transaction means, they are not cash transaction, they are not credit transaction. Which means we are not paying the cash or we are not receiving the cash now or in future also. One good example is given, goods are gone through theft. If we have kept goods in our business, then some thief is coming and stealing it, then thief is not paying us the cash and we are not receiving that cash in future also. So friends, what is the difference between cash, credit and other transaction? In cash transaction you are receiving or you are paying immediately. In credit transaction you are receiving or paying in future. But in other transaction you are never receiving or paying the money. They are a type of loss to the business or they are a type of profit to the business. But no one will pay or no one will receive the cash. That are other type of transaction. Again, what examples are given? Goods destroyed in accident. Through accident some of the goods have been defected. Then that is other transaction, because we will not receive money, we will not give the money. Asset becomes useless. Suppose we are having a machinery in the business. Now that machinery becomes defective, so we have to throw it outside. So that is also a type of loss, other transaction. So friends, today what we have learned, we have started with the chapter, and in this flowchart, again I would try to repeat. We have seen what is business transaction. We have started with economic transaction. We have seen cash transaction, credit transaction, other transaction. This is okay for today. Now the next day what we will do, internal external transaction, we will see internal transaction, external transaction, and we will go for non-economic transaction, so that the whole flow chart becomes complete. And after that, after completing this thing, we will identify, means there are some examples given in the book, we will identify whether it is a cash transaction, credit transaction, other transaction, internal transaction, external or non-economic transaction. Means simply a sentence would be written, we have to understand that rules, everything will be given and the transactions will be understood. Okay friends, so that's all for today. Thank you.